Hello traders, the title of this video is FS Trader discusses his dollar yen technical analysis in 2017. FS Trader discusses his dollar yen technical analysis in 2017. All right. So talking about my technical analysis for the dollar yen in 2017, the first thing one should know about the dollar yen is a market indicator. All right. So we have the market leaders that are also market indicators. We have gold, we have silver, that is also a market indicator. But the most neglected market indicator is the dollar yen. All right. So the dollar yen has been bullish from 2012 to 2015. Did you know that? All right. So here it is, 2012 to 2015. The dollar yen was bullish. All right, was very bullish. Now it started going down a bit. This is what we call a correction. All right, a correction. This is normal. Okay, it's healthy, in fact, for the price sometimes to come down a bit after a trend. It's like a breathing in and breathing out. But generally, a lot of people do not like a bearish market. I do not know why, because bearish market is like the winter for us, okay? So, talking about technical analysis for 2017, the first thing that I want traders to remember in 2017 is the first long-term equilibrium price level for the dollar yen. It is now at 109.29. That's the orange line here, 109.29. You do not want to forget that key level at all, because it's one of the most influential key levels for the dollar yen. You want to know that, okay? You want to remember that. 109.29. So the price is now coming down, okay? It will be better for the dollar yen in normal condition, gently, slowly, all right? To continue to drop it down. So it's not going down in a straight line. It'll be going down, go rally up a bit, come down. It will be normal for it to continue to push it down to the first long-term equilibrium price level, bringing the price near the edge of my pitchfork tool. See how I draw the pitchfork tool? 3 point we need to draw the pitchfork tool. All right. 1, 2, 3. Now we have our pitchfork tool. So in normal condition, we prefer the dollar yen to continue to go down near the first long-term equilibrium price level, and even to test the edge of the pitchfork tool. There's a high chance that the dollar will come near the level of 109.29. There's a high chance. Though it is above the long-term equilibrium price level, which is in fact bullish for the dollar yen. Okay, looking at the price structure, in fact, personally, I will expect the dollar yen to go down to this level, 101.01. 101.01. Beautiful number. This is the 50% Fibonacci retracement level of the previous trend. That's where usually the dust will settle. So you see here, so the trending first has started here, 2012 to 2015, and as the correction has begun, it pushed it toward the 50% Fibonacci retracement level of the prior trend. All right. So therefore, before this year, it will be better for the dollar yen to come back one more time near that level of 101.15, to form a double bottom chart patterns in this zone. Even if not, to push it a little bit more down, or to have a long tail like this one here, you see, one particular amount, one long tail, so probably coming near this zone, but one particular candlestick bar to have a long tail to retest this level here, this level here, 9499. Okay, that would be reasonable for the dollar yen. But right now, as the dollar yen is above the long-term equilibrium price level, 10929 is bullish, we need to be very careful if one is selling above 10929. This is a warning. One is selling above 10929. One should be very, very careful because it's a bullish zone. All right? If you do not want to attempt to sell it there, you prefer to wait until it breaks below 10929 and find a resistance below it. Break below, retest. Pay attention to the candlestick patterns in the zone. Okay, you want to sell. What do you wait for? You want the price to go up. All right, all right. Sometimes it's difficult for people to understand that. All right, you want to sell, you wait for it to go up first. All right, you want to buy, you wait for it to go down first. All right, so that's what I'm saying to you. So this is a bullish progression. Price went up here from the 50% Fibonacci retracement level, 10101, 10101. It went up. It is bullish above that level. If now that is pulling back because people are waiting to buy. So you want to buy, you wait for it to come down first. So now after a bullish move, so it went up. People are waiting for it to pull back near the 10929, and there will be buyers in this zone. That's why I say to you, if you are selling above 10929, be very careful. So pulling back, there will be people trying to buy here. So probably they will try to buy first and then bounce up a bit before they will attempt to push it back down. But if you hold it above that 10929, it's still bullish. So all you need to remember, 10929, as long as it's finding a support above it, it's bullish. Priority to bullish signal above and priority to bearish signal below it. Personally, it will be healthier for the dollar yen, all right, to continue to go down gently to retest 10929, even the edge of the pitchfork tool. In the worst case scenario, or even better, to form a double bottom chart pattern here in the zone of 10101 with one particular candlestick bar like this having a long tail trying to retest the 9499. In that case, we will say that the dust has settled for the dollar yen. Otherwise, if we try to push it out by force, there will be people around trying to sell it. But as I'm talking to you like this, you need to understand that decisions that are made by the U.S. Federal Reserve will affect the dollar yen. So if they start putting up interest rates at a faster rate, the dollar yen will continue to go up. Decision made by the Federal Reserve will definitely influence, okay, the dollar yen. Do not forget that. One thing I always say to traders, Forex traders, this, that if you are trading Forex and you don't want to pay attention to the economy news, go and trade something else. I mean, it's quite harsh to say that, but it's true, all right? Okay, the current short-term equilibrium price level for the dollar yen, which we must watch, is 11625. 11625. That's the turquoise line here, 11625. That level will remain in place up to the end of February 2017. Right? 11625, that's the current short-term equilibrium price level until we have a new short-term equilibrium price level. But the first long-term equilibrium price level is 10929, will remain in place throughout 2017. So, few key levels that you do not want to forget if you are trading the dollar yen. First one, 10929, all right? For day trading, swing trading, up to the end of February, remember 11625. And you do not want to forget 10101. So this level here, 10101, is a very important key level because it is the 50% Fibonacci retracement level of the prior trend. It is also a psychological price level for the dollar yen. So if the dollar yen breaks below that level, 10121, 10101, the bearish sellers will rejoice. So if it breaks below that level, 101.01, and find a resistance, don't try to buy it. Just wait until it goes back above it before you try to buy it. Trying to buy it below 101.01 is to be a little bit courageous trader. You may use that strategy for day trading purposes only. All right. If you're trying to buy below 101.01, it's for day trading purposes. But for position trading and also for swing trading below 101.01, be gentle. All right. So you'll be better if it goes below 101.01 and have that long tail to this, okay, 9499. I will say that the dust has settled. All right, then we can try to buy from there, but be careful. Always, you are buying below that level. Be careful. All right, you are buying above one. You are selling above 10929. Be careful. Okay. So those are the things you need to pay attention to, and also the pitfall too. So there's a high chance you will try to push it back to this level, but because we have a bullish progression pulling back, there will be buyers in the zone of 10929. But personally, I would prefer the dollar yen to continue to go down gently this year until it forms a beautiful, gorgeous double bottom chart pattern in the zone of 10101 with one candlestick bar having a long tail like this that will certify to me personally that the dust has settled for the dollar yen. But remember, policy made by the Federal Reserve will definitely influence this technical analysis. They start putting up interest rates. Well, the good news for the dollar, the US dollar, it will appreciate against many other currencies. This is the end of this tutorial about FX Trader discusses his dollar yen technical analysis in 2017. All right. If you have any question or suggestion, all right, put in the comment section, and in due course, I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon.